Hey everyone, Eric here. In this video, I'm going to teach you about the influencer business model. By the end of this lesson, you'll understand how to build a financial model for an influencer scaling and monetizing their audience across multiple platforms with multiple products. Okay, let's get started. So in our video, we are going to be building sort of a series of businesses around a YouTube channel. So this influencer is going to be posting 4 videos per month on YouTube, which will be accumulating views and subscribers over time. And then this influencer will be monetizing the audience through ads, through the Google AdSense program, which is the advertisements that Google runs on top of the YouTube channels, private subscription based community, merchandise, sponsorships from other brands who want to advertise on the channel. We'll talk about sort of how you can build an email list over time because that's additional distribution, other possible channels, and then finally we're going to crunch all the numbers to figure out how much revenue do we have coming in, what are the costs, and ultimately what is the profit of this business. But before I jump in, I just want to give you a couple interesting facts about the influencer space. So the historical technology business model would be build the product and then try to figure out, can we find an audience? So you build some app and then you hope that you can find an audience. The influencer business model is that they build the audience first and then they launch the product. So building the audience is the part that usually takes the longest. And so influencers will, for a long time, sort of not make any money building a big audience. But then if they launch a product, they have a huge business overnight. So they've really flipped things, and it's very interesting. It's very disruptive. I also wanted to touch on a couple points that are tailwinds around a lot of money getting poured into the influencer marketing space right now and just the influencer space in general. So there's 3 major things when I think about this. First off, Facebook in particular, and the other sort of ad tech businesses, but particular Facebook is becoming sort of no longer cost effective for advertisers. So a lot of these e-commerce businesses that 3 years ago or so would be able to buy a lot of relatively inexpensive traffic to their websites. Now the cost per clicks are like $5 to $7 on Facebook. And with the conversion rates and everything else, it's just an impossible channel now for a lot of the companies that used to build and drive traffic from Facebook to their website. So for a lot of businesses, Facebook is basically broken. Some businesses, they're sort of right on the brink. And then certain businesses with a high customer lifetime value, they're still able to make it work, but advertisers are desperate to get away from Facebook right now. So the other thing is influencers. Obviously, this space is huge. And there's so many platforms, podcasts, YouTube, everything, TikTok, Instagram. And influencers have enormous distribution in very engaged audiences. And a lot of times it's cheaper to work with an influencer than it would be to buy clicks from Facebook. So sort of on an interaction basis, it's cheaper. So, people want to work with influencers and their distribution is growing very quickly. And then the last thing is that Google was always the sort of creator-friendly platform. So from the very beginning, Google had paid out a minimum of 55% of all of their advertising revenue to the creator. So if you had a big website and Google was running sort of banner ads on the website, they would pay you a minimum of 55%, sometimes 65% of the ad revenue straight to the creator. So creators have always loved working with Google. And then Google owns YouTube, and YouTube pays out 55% of all those ads you see on YouTube. All that revenue, 55% gets paid to the creators of the channels. So YouTube and Google has always paid a lot of money to creators. Facebook, on the other hand, has never paid any money. So when you see a big influencer post and Facebook's running ads on top of the post, the creator doesn't make any money. So the creators have always been forced to sort of try to monetize their businesses through, sponsorships offline, through launching their own products, etc. But the interesting thing is that these are 2 giants with very different strategies. And a lot of the up and coming ad tech platforms like Twitch and TikTok have sided with Google and just announced that they're going to start paying influencers 50 to 55% of the ad revenue. So influencers are about to start making more and more money across every single platform. So these are just some tailwinds for the influencer space. Okay, so now let's talk about this financial model. So influencer businesses are all based around how large of an audience can you build and what are the conversion rates that you can drive from that audience to, go to a certain website, to get on your email list, to make a purchase, etc. So we always need to start with, how do we scale the audience? So we're going to make the assumption that we launch 4 videos a month, every month for 4 years straight. And so you have this sort of cumulative number of videos that is growing. And so the way you do that is you just take basically last month's total and you add 4. So you have the 8, you add 4, 12, you add 4. So we have our videos that are accumulating on our channel. And then obviously historical videos drive some traffic and then new videos drive some traffic. And so if we want to think about what those dynamics are, let's say we're starting from 0. Like we're an influencer, we have no audience, and we want to grow this channel. So we start with basically 2 assumptions. The first assumption is views per new video in its release month. So when you release a video in its first, let's say 30 days, how many views does it get? And so that depends on the popularity of your channel. So how many subscribers you have, how many people actually care about your content. Then you have views per video in subsequent months. So this really depends on the type of content. So some content is more sort of event-based. So let's say if you're reporting on news, if you're reporting on something that just happened, a month later, probably nobody is going to be watching that video. And so you'll get most of your views in this big spike in the first, let's say a couple days. But then there's another type of video which is built around what's called like more evergreen search traffic. And so these are sort of videos that will always be relevant that don't have to do with any sort of current events. So a lot of things around education or, could be an interview with someone who's well known for a long time, etc. These videos will drive views for many years. And so you need to kind of know where you are because the evergreen content won't have these big spikes, but it will have the much longer tail. So let's first build the views for the new videos. And we're going to say that our channel does a little bit more of the sort of evergreen style content. So our videos drive a lot of views as they sort of sit on our channel. So as we accumulate more videos, we accumulate a lot more views. So let's say that we increase sort of, let's say 10 every month, we increase 10. So we have, in our first month, a new video gets 5 views. Next month is 15. And then by the end of sort of year 1, we're up to 115 views for a new video. So we've kind of built our audience up. So when we release it, 115 people are there to watch it. And after that, let's just say that we can, this number grows at 20% a month for the next 2 years. So month 13 through month 36. So we're sort of growing this here for 2 years. And, at some point, growing 20% a month is like, it's pretty crazy. It might be a little too aggressive. But again, if one of your videos goes viral, you kind of never know. So we're just going to put that in. And then we're saying that once we get into year 4, once we're off this much larger base, we're going to say that we're able to grow our new views per video by, let's say, 5% a month, which is still, a lot of growth in terms of number of views, but a lower compounding growth rate. And naturally, the higher your denominator is, the harder it is to sort of maintain that really high growth rate. But still, that's, almost doubling in a year. So that's, great growth. So let's say that views per video in subsequent months. So let's just say that, okay, if you launch a video in month 1 and it gets 25 views, what do we think the video is going to do in views per month after that? Let's say it gets sort of a quarter of the first month's views in month 2. So if it got, say, 40 views in month 1, then in month 2 it gets 10 views, and then month 3 it gets 10 views. So you have this kind of tail that's a little smaller than the first spike, but is sort of the evergreen tail. So I'm going to say month 1 divided by 4. So this is sort of like the tail of traffic. And of course, the more videos we get over time, the larger this stream of sort of recurring views will be. Okay, so now let's look at our total views. So let's say total views for new videos views for existing videos, and let's say total views. Okay, so views for new videos would be, so video upload, so those are new videos, times views per new video. So that would be 20. And so in this month, if we just multiply this forward, you see that if our new video on average gets 16,000 views by month 48, and we have 4 of them, then we'll get 65,000 views just on our new videos in month 48 because we've built our audience up a lot by then. Now, existing videos is just going to be total videos times this assumption that we made, subsequent months. And so one thing I want to say is, like, channels are so different that there are no rules of thumb. So these are assumptions that I'm sort of just making, but you'd have to know that there's such a spread of distributions on these types of things that you would kind of have to go into it with knowing generally what you're after and then just see where the data goes and then build your model around the data that you're seeing. But I'm going to give you numbers that are based on my most reasonable guesses. So, okay. So here you can see that 75 views. We have 12 videos on the channel at this point. Let's see. Oh, but these would be from historical. So this would be 8 videos that we had in month 2 times views per video that are on the channel. So that would be 50. And then in month 1, we would have nothing. Okay, so let's see how many views we would actually get to. So yeah, here you'll see that by month 48, we get to 837 views per month on the channel. And that's being driven by a lot of sort of evergreen traffic from older videos. And so that sort of accumulates over time and becomes a much larger view stream than the new videos, which is what you want. Now let's figure out, okay, how many subscribers do we think we can actually get? And, it's actually very surprising on YouTube. Usually a very small percent of the viewers will actually subscribe. A lot of times it's like 10% or even less of your total views on your channel will even be people who are subscribed. So people watch a lot of stuff without subscribing. So you need to kind of figure out, you obviously want people to subscribe. So views to subscribers conversion, you want them to subscribe because then they'll have a higher chance of watching your future videos. So let's say that in any given month, we're able to convert like 2% of our viewers to subscribers, which is actually like a very reasonable number. So 2%. And then, so that would get us our subscribers. So subscribers added, and then total subscribers. Okay, so I'll make that in bold. And so this will be views times 2%. And then total subscribers will be this. And all you have to do here is now just take any new subscribers that you have, and you just take the last month total plus new subscribers. So over time, the idea is that you get, more and more subscribers, and they sort of add up over time. And by the end of the model, we're saying that the subscriber total is 178,000 subscribers after 4 years, which to me, uploading 4 videos a month, really good videos, these numbers feel reasonable. Obviously, this isn't something that's easy to do, but it feels like if you could, do this for 4 years in a row, that these numbers are very much attainable. And many people do it faster than this. And then, of course, the vast majority of people just burn out before they get, into the 4 years into the journey. So now let's talk about monetization. So on YouTube, there's a minimum sort of threshold to be able to monetize. So the monetization minimum is, I think it's 1,000 subscribers and 4,000 hours watched. So you have to basically have a minimum of these numbers for YouTube to look at your channel to consider approving it for monetization. So assuming that you have reached these thresholds, we need to talk about the advertising rates. So we're going to build this into our model so that we don't monetize anything until we have 1,000 subscribers. And you can see that in our model, we don't actually get to 1,000 subscribers until month 20. So I'll show you a formula that you can use to sort of model that. So first, we're going to talk about the CPM. So the CPM is something called cost per mil, and that is the price that YouTube charges advertisers to advertise to 1,000 people. So CPM ranges are very, very wide. I would say they're anywhere from like $3 to probably $40. Could even be less than 3 or even more than 40, but I would say that's kind of a range that would be normal to me. So I'm going to say our CPM is $10. So what would cause you to have a higher CPM or a lower CPM? Well, it really just depends who is watching your channel. So, the advertisers want to target specific people with specific interests in specific industries who are maybe consuming certain types of content. If your audience is heavily based in one country that has different like income demographics than another company, that can drive your CPM up or down. If your channel is about, let's say, recommending a product or about education or about business or whatever it is, it might have a higher CPM. But if it's about more like entertainment, like just some cat videos or whatever, like it might be a lower CPM because those people who are watching that, in bed are less likely to actually convert on an ad on that channel. So there's a whole algorithm behind it, but the CPMs can be higher or lower depending on what type of content you make and who watches it. So we're saying that our CPM is $10. And but the thing is, not every person who views a video gets shown an ad. And so we're going to say the monetized views rate is about 50%. And 50% is a pretty normal number. So sort of 50, let's say if you had 100,000 views on your channel, they might only be running ads on 50% of the views. So the total actual monetized views would be 50% of your views only if you have more than 1,000 subscribers. So the way that we're going to do this is we're going to say, basically, we're going to write an if formula. If your subscriber count is greater than or equal to 1,000, then multiply your views times 50%. If not, then 0. And so what did I just do in this if-then formula? So if you've never written one of these formulas, it's just how you can create sort of like a logical, so if this condition is met, then give me this number. If it's not met, give me this other number. So this is just saying, if we have more than 1,000 subscribers, take 20 and multiply it by 50%, because that would be 10 monetized views. If the subscriber number is less than 1,000, just put in a 0 because I can't monetize any views. So this is a way to sort of automate this. So here you'll see that the number, if this formula is working, it shouldn't kick in until we cross 1,000 subscribers, and now it's taking the 11,000 views, multiplying it by 50%, saying we have 5,687 views that we can monetize. Okay, so what's the actual ad revenue then from, it's called Google AdSense, is the platform that runs the ads and ultimately will pay the influencers. So what we basically need to do here is just take the monetized views, and what we need to do, let's go to one that actually has data in the formula. We just take the views and we divide it by 1,000. So you'll see that gets us, 5 point something times the CPM. Because remember, this number is $10 per 1,000 views. So if we have 5,600 views, it should be, about $56. And so this is your ad revenue from Google. So again, that's not a very big number, obviously. But the thing about these influencer businesses is they have these very steep tails. So there'll be these long periods, and this is the exact same with technology businesses. They'll start from very low bases, but if they can compound for long times, they hit these very exponential growth curves. And so in the beginning, you'll see, that the numbers are pretty small, but sort of, they start to grow very quickly. So this person might be making, $1,900 a month, and then a year later, it's double. And if you can just keep doubling every year, eventually the numbers get very, very big. So we're saying that by the end of year 4, the advertising revenue gets to 4,000. Again, if this channel was, say, about, a certain very specific subject that had a very high value audience in a very specific country, if this number was 40, and it could be, the ad revenue here could be 16,000. Contrarily, if it was $3, then the ad revenue could be much smaller. So the CPM is very important. Okay, so now let's move on to the next monetization channel, which is a sort of subscription-based private community. And so there are a lot of different platforms where you can build subscription-based private communities. One of the popular ones that you'll see on YouTube is obviously Patreon. Another very popular one is Kajabi. Patreon's more for like subscription-based communities. Kajabi's more for like launching courses. Anyway, there's a bunch of these different platforms. A lot of people just build their own on like, WordPress or different websites with a bunch of different plugins. So there's a lot of different ways that you can build subscription programs. So we're going to call this subscriptions, and our product, just want to call it out here, is exclusive content, live streams, etc. Something that basically the audience that watches the YouTube channel does not have access to that they would like. So let's say, so you're going to have to basically create, additional experiences in this community. So you're going to probably release new videos every month and probably do new live streams every month. And the reason why I want to put these numbers down is just so that we can keep track of how many videos and how many live streams we're making, because obviously one person can only do so much. So let's say, maybe not, let's say 2. So 2 videos per month and 2 live streams per month. And people basically are happy to pay, a couple dollars a month to get access to, ask this influencer questions live and see some sort of behind the scenes stuff on what they're doing. So now we need to figure out, okay, so how many people do we feel like we can convert from our YouTube channel into this subscription-based private community? So we're going to say conversion from YouTube. So let's say subs converted. So this number should be very low, because I see sometimes very, very large channels, like millions of subscribers, and I'll go in their Patreon and they only have like 300 patrons in their Patreon or whatever it is. So it totally depends on the channel, but I think with this particular product, I see pretty low conversion rates. So let's say 5%, 0.5%, so 0.5% a month of your subscribers. So again, your subscribers just represent a fraction of your views, and of your subscribers, let's just say, only 1 in 200 subscribers wants to be part of this program. So that's 0.5%. And to me, that sounds like, we'll take a look at what the numbers it spits out, but that sounds like a believable number. And so I'm just saying here that in the first year, we're just going to make it gray, meaning we're not doing anything, because there's no point in trying to monetize your channel when you have 2,000 views a month. It's a much better use of your time to try to grow the channel and then just kind of monetize it in the end. So okay, so we have subs converted, so that will give us our new subscribers. Then churned subscribers, and that would be total subscribers. So this is the same way you'd build sort of a table of total active subscribers for any subscription business. So this would be the same for an app or whatever it is. So you can use the same logic. And the thing I like about this model is it's going to tie together things about e-commerce, things about subscription, things about advertising, monetization. So it does tie together a lot of different startup monetization models in one business model. So it's kind of fun. And then of course we'll have a churn rate. So For something like this, like a B2C product, a decent churn rate would be like 15%. So if your community was really great, let's say you'd only lose 15% a month, and that would mean, this is a little mathematical trick here. You can take the monthly churn rate, you can take 1 divided by the monthly churn rate, 15%, 6.6. So that's going to be the average lifetime of one subscriber. So if 15% of people leave per month, it's just this formula from statistics, but the average person will stay on for approximately 6.7 months. So, okay, so now let's figure this out. And the last thing I want to call out before I write these formulas is the average price per month. And so let's say the average price per month is $4.99. So $4.99. So sort of a lower enough price point to, you'd probably have a low churn because it's a low enough price point for a lot of people to just forget about it. If it was $50 a month or $100 a month, they would see it popping up on their credit card statement, and every month they would be like, "Do I need this? Am I getting the value out of this?" But if it's $4.99 a month, it's kind of a price point where probably a lot of people wouldn't really cancel it for a while, even if they wanted to. So $4.99. So now we need to figure out, okay, so how many new subscribers do we have? So what I'm going to do is I'm going to use the round formula. So it's round and open parentheses, and it just rounds whatever the output of your formula is to a whole number. So what I'm going to do is I'm going to take total subs times 0.5%. And then you do comma, and it's how many digits do you want to round this number to? So I'm going to say 0. So I want to round it to a number with 0 digits. So I rounded it to 1. So I can extend this formula forward. So now each month we see, we have a certain number of new subscribers coming in, but we'll also have a certain number of subscribers who are churning each month. So in the first month of this program, it would be 0. So we can just take this and we can add together and you'll have 1. But in the second month, here's how you can do this. You can say round, same sort of formula. You can always use this round formula if you want. And you would take, actually let's put a minus sign because it's going to be a negative number, it's people you're losing. And you'd take last month's total, so we had 1 total subscriber, and we'd multiply it by the churn rate, comma 0, round it to a whole number. Of course, that number is going to be 0. And then you take the last month total plus any new subscribers minus any churned subscribers. So that's going to be 2. So let's just pull this across so you can see where there's some real numbers in there so you can see how the formula is working. And so here you can see that we have 53 subscribers in the previous month. This formula says 53 of those subscribers basically canceled. And so you have 53 plus 21 minus those 8. So over time you can see this building up, and at the end you actually have a total of 3,697 people who are paying that subscription. So let's see how much revenue that would actually be. So we say total subscription revenue. Okay, so all we need to do here is let's just make this black. Whenever you're building a financial model, dark blue means it's an assumption, meaning it is a hard-coded, just typed in number that you can change around. Black means there's a formula. So I would take the total subscribers times 499, and now I copy this across. So by the last month here, let's reduce the number of decimals, you would have 18,000 of revenue. So yeah, if this channel had almost a million views a month, 178,000 subscribers, let's say a very vibrant community, would only 2 videos a month and 2 live streams per month be enough for this community? I don't know. Maybe this revenue number is too aggressive, but I think for now we can just leave it just so that you can understand sort of like how the conversions and sort of the numbers would work. one quick thing, if you're finding this content valuable, please subscribe to my channel right now and like this video. And also, if you want me to teach you everything I know about finance for startups in a small group with personalized support from me, join the waitlist in the description below for a chance to join the next cohort of my training program, Finance for Startups. Okay, so now let's jump into merchandise. This is another monetization channel for our influencer. So when I say merchandise, I just mean a product. Obviously, an information product, so like an online course, is also a possibility. And it depends. It depends if the influencer is, teaching, or if the influencer, what exactly they're doing. We're going to say that in our niche, it makes more sense an actual physical product. So we're going to say the product is a hoodie. So the product is a hoodie, and that, for the thing that the community that they built is a more interesting product that people would actually want to buy. So, so we have a hoodie. So let's kind of build out, again, some conversion rates that we think would make sense from the subscribers, and then the price and the costs around a hoodie. So first off, let's say community members conversion, and then YouTube subs conversion. So the benefit of having multiple communities is that you can sell your products into all of them. So if you had an email list, if you had a subscription-based community, if you had a YouTube channel, you can sell in these different products, and people who maybe bought your hoodie, you could promote then the exclusive community to them, et cetera, et cetera. So we have conversion from the community members. So the community members are already sort of your super fans. So probably we'd have like higher conversion from them. So let's say 2% of them in any given month are buying. And then in terms of YouTube subs, probably a way lower number. Let's say like 1/10 of 1%. And so that's like, they're 20 times more likely to convert if they're in the private community. So now from here, we can basically just model out the conversions. So we have from private community, from YouTube, and then total purchases. Okay, so from the private community. So let's say round, just like before. So we have a number here, which is our total subscribers in our private community times 2%, and then round that to 0 digits. And if we pull that forward, you'll see some, numbers actually show up. Let's see here. Oh, we need to copy the assumptions across as well. Okay, cool. So you'll see here that 2% times 251 would be, rounded to 0 digits, would be 5 people. Okay, yeah, that number makes sense. So, and by the end, you have 74 people a month converting from the community and buying one of our hoodies. Then you have from YouTube. So again, round, and you're going to take the total subscribers times 0.1%, rounded to 0 digits. And if we copy that across, at the very end, let's see what that number is, 178 hoodies. We have 1 million views a month, 178,000 subscribers. That number to me feels very possible. So I think those are decent guesses. Again, these are all guesses. So let's drag this across. So that would be 252 purchases. So now what we need to do is we need to break out the unit economics. So that means the unit price, the unit manufacturing cost, the fulfillment, etc., so that we can forecast the revenue. So let's say the price of one of our hoodies is $49. So let's put it in blue because it's an assumption. So we're saying cost $49. The manufacturing is $14. And then the fulfillment is $18. And so that would leave us with a gross margin. So the gross margin is your revenue, so your price minus your direct costs, is $49 minus 18 plus 14. So that would be $17 of profit per one hoodie sold. And I'm going to say GM percent, because you always want to kind of keep an eye on what's the percent of your revenue on an e-commerce product that you're converting into profit. 35%. And so that seems like a reasonable number, given that we don't really have any marketing costs on top of this because we already have the audience. So every time we sell a sweatshirt, we're going to make $17 in profit. So that seems to make sense to me. And so let's just figure out what the total revenue is now. So we would have revenue, and let's italicize revenue, COGS, cost of goods sold, and then gross profit. So I can get rid of some of these rows. Okay, so revenue is just going to be total units times 49. That's going to be $. COGS is just going to be total units sold times 14 plus 18. And so our gross profit is going to be revenue minus COGS. And I'm going to put a bottom border because it's nice to put a border right below gross profit. And let's see by month 48 what this looks like. Okay, so we're saying that basically we sold 252 units at $49, and that equals $12,348. It costs about $8,000 to manufacture and ship the products, and so we made about $4,000 in profit. Okay, so now we have our YouTube advertising revenue, we have our private community, we have our merchandise, and now we need to build out our sponsorship channel. And so let's figure out what this looks like. Okay, so for the sponsorships, the pricing here is going to be pricing per video. So it's going to depend, sometimes it depends on how many subscribers your channel has, or sometimes it depends on, how many views they think, an advertiser thinks your video can get. But I'm just going to do this on a pricing that's based on the number of subscribers that you have, because a lot of people come and that's how they basically will price influencers sort of sponsorship. So I'm going to say less than 25K subs. The amount that an advertiser would pay would be $0. It's probably a waste of your time. Even if you could get them to pay something, it wouldn't be enough to be worth focusing on it. Then I'm going to say 20 to 50K this totally depends on the space. I'm going to say if our CPM is 10, so CPM is kind of on the lower side, that an advertiser would pay 500. But again, if you had a CPM on the higher side, or a channel that was teaching something a little more specialized, like this number could easily be, 3,000 or 4,000. I mean, it sort of depends. The next one I'm going to say is 50 to 100K. I'm going to say for our channel that's 1,500. So an advertiser is willing to pay 1,500 to sponsor a video. And then finally from 100 to 200K, an advertiser would be willing to pay, let's say 3,000 to sponsor a video. So I'm going to drag these across, and what we can do now is basically write a formula to say sort of like what pricing tier is our channel currently in, and then we can make an assumption to say how many videos per month are we able to sell sponsorships to. Probably won't be every video. It's a lot of work to find sponsors, and so probably some of the videos will have no sponsors, some of the videos will have sponsors, and we'll make an assumption, and then we'll figure out that revenue here in a moment. So first I'm going to call this the tier. So we need to look at, how many subscriptions do we currently have? So the subscribers are for the YouTube channel are in this row 19. So I'm going to write what's called an if formula, nested if formula. So I'm going to say if the subscriber number So that is here. B19 is less than 50,000. Less than 50,000, right? Or less than 25,000. Then we're going to get paid 0 per video. So what we can do here is say, okay, if the subscriber number is less than 25,000, it's going to be 0. Then we can put another if formula in. We can say if the subscriber number, so if B19 is less than 50,000, then it's going to be 500. Then we can put another if formula in. So it's saying if it's less than 25,000, 0. If it's between 25 and 50, 500. If B19 is less than 100,000, then it's going to be 1,500. And finally, if B19 is less than 200,000, then it's going to be 3,000. So now we get to see if my formula worked. So let's see. And again, you don't have to write this long formula, but it does automate it. So, okay, in this situation, the subscriber number isn't, supposedly it should just have crossed 25,000. So let's go up to B19 and double check. Yeah, exactly. So it just crossed over 25,000. So it's at the 500 tier. And so once it crosses 50, it should be in this month. If the formula is working, yep. So it goes to the 1,500. This should be the month where it crosses 100K. So let's go back up to B19 and yeah, just cross 100K. So now we can just figure out, okay, how many of our videos that we're uploading per month are we running sponsorships on top of? So let's say percent of videos sponsored. And we can say, let's say 50%. Honestly, it would probably be lower. But I think we can say 50%. And then we can say sponsored videos is just round total uploads times 50%. Okay, so 2 videos sponsored. And then, so the sponsorship revenue is just the tier times the sponsored videos. So now that we've got all the formulas written, it's actually pretty easy. So we're almost done here. All we have to do is sort of look at the email list, which is not going to be necessarily a revenue driving list. And so the sponsorship revenue, let me just look at this really quick to see by month 48 how high it is. So it's 6,000. So 6,000 of additional profit on top of all of the other revenue and profit streams. So finally, your email list. It's really good if you can build an email list because any platform, there's a risk of getting sort of deplatformed. And a lot of times it's done algorithmically. So certain people lose their ability to be monetized on Facebook or on YouTube or whatever, and then there can be a review process. And so certain people just lose their audience all of a sudden. So it's good to kind of have your audience's information on multiple platforms. And if you can, build an email list, that's a really good way to have, a second way to contact them in case anything happens so that you can continue to sort of have a relationship with your community no matter what happens. So the email list, we're going to say that we are converting sort of a percent of people from all of our other channels into our email list. So you're building this ecosystem. So you have your new emails, you have from your private community. So those are just people who've signed up. You definitely get their email. Then you have your merchandise sales. You for sure get their email. Then you have from YouTube. You probably have a very tiny of people converting from YouTube? Depends. If you can offer something to them of value, then maybe they will sign up to get on your email list. Or maybe you have a free newsletter and you say, hey, I'm going to send you, my thoughts about XYZ. And if they're already a fan of yours, maybe they'll convert. So depends on what you do. Total new emails. So let's look. From the private community, it's just going to be private community. It's just going to be however many people signed up. So I think it should be the new people that come in. Yeah, so new subscribers, right? Yeah, so new subscribers. Okay, so private community will be your new subscribers. And so if we drag that across, every person that comes into your community, you charge their credit card, etc. They're in your community. Obviously, you're going to be getting their email. So these are new emails. Then from merchandise sales, anyone who buys your merchandise. So that's going to be 252 people. And then anyone, we need to make like a conversion rate from YouTube. So let's say YouTube subs email opt-in percent. So what could be a good percent? Something low. Let's say another 0.5% kind of a number. And so that's going to be YouTube subs, 178,000 times 0.5%. Let's say that's 890. So 891 people. And so your total new emails are going to be 234 in the final month. But why do I say new? Is because emails, just like subscriptions, just like anything, a lot of people unsubscribe. A lot of people don't open the emails, and you need to clean them off your list because these email tools are very expensive. So if you have one email on your list and the people aren't opening your emails or they've reported you as spam, you need to remove them. So I'm going to call that unsubscribe/cleaned. Unsubscribed/cleaned. Unsubscribed is when they remove themselves. Cleaned is when you remove them, because let's say they aren't opening the emails, or they haven't opened an email in, let's say, 6 months, but they've received 6 emails in the last 6 months. So let's say you remove 5% of the emails a month in one way or another. So here you have, just like the last sort of subscription table, you have, okay, let's copy this across. You have new emails, you have churned emails, and you have total emails. So, and why am I including this? Because, if you're working with sponsors or if you're launching a new product, like on YouTube, if you want to announce a product launch, just because you announce it in a video on your channel doesn't mean that your audience is going to watch it. You might have a bunch of subscribers and 5% of people watch any given video, but if you have an email list, if you're doing sponsorships, you can say, hey, I'm also going to promote you to my email list. If you launch a product, you can say, I'm going to send this out to my email list, and your open rates on your emails will be high. They'll be 20, 30+%, and so that you can get in contact with your audience faster through your email list. So it's really important to have one if you can figure out how to build it. So the new emails are going to be here. Then your total is going to be this. And just like last time, we're going to say your total plus your new, and then we need to figure out a churn number. So round last month's total times 5%. Round it to 0, make that number negative, and let's go to a month where there actually are some numbers so that we can see if these formulas actually make sense. So okay, cool. So in this month, we would say last month we had 6,000 emails. We lost 5% of them. We cleaned them, or they unsubscribed. Then we got 1,340 more. So by the end of month 48, we have a 12,000, almost 13,000 person email list. And so that's part of our ecosystem of distribution. So now we've covered basically the whole build. One thing I want to mention is obviously there's sort of like any number of channels. It's, there's kind of an infinite number of possibilities. I just kind of covered some of the main ones. And so what are some that maybe I forgot to mention or that we're not going to put in this model? Of course, I mentioned courses. So like information-based products that you can sell. Consulting is obviously, let's say this person is in the early days, their business is not being monetized at all in the first 1 to 2 years. So, if people reach out to them and want to work directly with them and we'll pay them to do work, consulting might be the main way that someone is monetizing their channel, if there's a demand for their services for something. Then paid newsletter is obviously big. So that's kind of like a subscription-based thing, and they'll receive an exclusive piece of content. Obviously, a lot of influencers have done stuff in crypto. Crypto obviously is a good technology for sort of like community-based financial things. So crypto is a big thing in the influencer world. You could run events, or you could do anything else you can come up with. So now let's build our full income statement. Okay, so I like when I'm building my income statement, of course I'm going to put revenue by channel, the expenses, and the profit. But first I kind of want to call out some high level numbers. So I'm going to say total videos uploaded in any given month, just so that like you're not, it's not a number that's impossible. Total live streams, YouTube views, YouTube subscribers, paid subscribers. So that's going to be in the community. Total email list. Let's say now, then we'll move on to revenue after. So total videos uploaded. So I'm going to zoom out a little bit here. So total videos uploaded is going to be the 4 videos plus 2 more in the private community. And then total live streams. We only actually modeled live streams in the private community. Let's say 2 per month. So you have 6 plus 2. So that seems very possible for one influencer to do. Then total YouTube views. Total views. Okay, so we are over in a very weird column. So I'm going to bring this back to the first column here. So the total YouTube views. We're going to say total views 20, total subscribers in YouTube 0, paid subscribers in the community. Where is that number? Total paid subscribers. So you'd have that here. Then you'd have your total email list. So, this just gives you a snapshot of sort of like where are you at any given point in the model. So if we copy this across, we will see that, in month, towards the end of our 3rd year, we have, we're putting up 6 videos a month, 2 live streams. This is how many subscribers we have. This is how many views we have. Here's how many people we have in the community, and here's how big our email list is. And so it's a nice summary of sort of all of the different things that we're doing. And then revenue, all we're going to do is we're going to say adsense. So that's the YouTube revenue. And then we're going to say subscriptions, merchandise, just merch is fine. Sponsorships, total revenue. So, okay, AdSense. So we have this very nicely organized. So drop that in here. Second is the subscription revenue. Merchandise. Let's see here, we've got our merchandise. So grab the revenue, not the gross profit. Then we have sponsorships, sponsorship revenue. Obviously a lot of zeros. And then email obviously doesn't have any revenue associated with it. So add that up, and that's your total revenue. And so let's copy that across so that we can see that sort of building up over time. Okay, you can see that, I mean, the numbers are pretty, there's basically nothing until after year 2. And this is what, this is pretty normal for, building up a community takes a long time. So now I want to look at our, just as we would with a startup, annualized run rate for your revenue. And so what's your annualized run rate? Annualized run rate is your monthly revenue times 12. So the idea is just that if you did this month 12 times in a row, you would do that amount per year. So if you did $10 per month, per year you'd be doing 120. So it's annualizing your current sort of like pacing of your revenue. So it's helpful to know because, okay, so we're saying that by month 48, our business at its run rate in month 48 is doing a sort of $491,000 annualized run rate. But if you looked at trailing 12 months, it's only $291,000. But it's really pacing for about $500,000 in that month. So we like to look at that. Then COGS, we have a couple things. So we have the manufacturing and fulfillment. So manufacturing and fulfillment, that was from our merchandise. So that's our COGS. We already sort of added that up. Manufacturing and fulfillment. Now I'm just going to put in a couple things here: software subscriptions and miscellaneous, just like consultants. So, if anyone who's a solo influencer is going to be needing a lot of different software to sort of tie together all their different things that they're doing. And then they'll probably be needing consultants, designers or people to, help them do very specific tasks like on Upwork or whatever it is. So I'm going to say that in the beginning, the subscription is going to be like $100. They'll be needing to pay for, a couple different things for $100. Miscellaneous, $25, helping with various design tasks and things with their email list, etc. So I'm going to say this until month 12, it's going to be these numbers. And then let's say they go up a little bit. Now it's $250 and $50. Again, these numbers are obviously not very big because most solo influencers do everything themselves. And then as this gets bigger, they have more and more subscriptions. Like, if they've got, they're set up to sell their product on a Shopify site or whatever it is, like they'll need to be paying more and more SaaS products. And as they launch more and more things like the Patreon, etc., they'll need more help. And then finally, let's say that it gets to a point where the subscriptions get to $1,000 a month and the random sort of miscellaneous task is to $250 a month. Again, still for the amount of revenue that's sort of coming through, that's not very much. So costs here are $9,000 a month. So our total gross profit would be, here's your revenue, here's your costs. And we can put the double bottom border here. Let's just drag this across. And so by the end, it's $31,000 a month of profit. And so if you annualize the profit is just basically what the influencer is making. If you annualize that, that would be about $380,000 a year. So of profit. Now I think the final thing I would probably do is I'm going to highlight the section, hold shift, and I'm just going to drag it to the top. So drag it to the very top just so that now the summary of the business is at the top. And when I have questions, I say, oh, I want to know more about subscriptions. I just go down the model. So I hope this gives you some perspective on the influencer business model, sort of how these influencers build large businesses. Obviously, the biggest influencers, can make upwards of $100 million a year. So if you just took this model and multiplied it forward and just had the numbers get bigger and bigger, there's an amount of compounding where once you cross 10 years, most of the massive influencers have been doing it for more than 10 years. The numbers just become absolutely enormous. So I hope this gives you some perspective on how they do this. By the way, if you want me to teach you everything I know about finance for startups in a small group with personalized support from me, join the waitlist in the description below for a chance to join the next cohort of my training program, Finance for Startups. And as always, in the description, you can download this Excel file completely for free. And if you found this content valuable, please like and subscribe. Only 10% of my viewers subscribe. Thanks for watching, and I'll see you in the next video.